Acquisitions to be successful, my view is they should be small or they should be large. Like middle-sized acquisitions are the most difficult for both sides to be successful. I have drunk the Kool-Aid of Wiz more than anyone on the planet, right? And so to then say I'm going to switch to iced tea is super hard, right?
What's the way for somebody to sort of break into being in your awareness?
Well, I'm not everyone's cup of tea.
Am I crazy?
Yeah, sort of. I don't know.
When Google announced it was buying Wiz for $32 billion, one name quietly became the talk of venture capital. Shardul Shah, partner at Index Ventures, was one of the first checks into Wiz, and it wasn't luck, it was pattern recognition. Shardul has spent nearly 2 decades at Index building a reputation for finding the right founders before anyone else does. Datadog, Duo Security, Coalition. The list speaks for itself. Today, we get into the Google Wiz deal, his human-first approach to spotting the next generation of great founders, and where he's looking for his next big bet. I'm Eric Newcomer, the author of Newcomer, the Substack that tracks the inner workings of startups and venture capital. Follow me and my team's writing at newcomer.co. And without further ado, here is my conversation with Shardul, one of the top venture capitalists in the business today.
All right, super excited. This is a big week for you. I'm here with Shardul Shah on the Newcomer podcast. Thank you for joining me.
Thanks for having me, man.
So we're here, in part, I guess we should have party hats and stuff. Google's $32 billion acquisition of Wiz, the Israeli cybersecurity startup, the check cleared this week. Is that right?
Yeah, it closed on Wednesday.
Yeah, and Index, and you're the largest investor shareholder, right?
Yeah, and so for the party hat, I'd prefer a cerebral valley cap. I mean, we could have been matching at least.
Yeah, so I guess for people just paying attention, explain, why Google is spending all this money to buy Wiz in the first place.
Yeah, look, the best companies are always bought, not sold, right? And it starts with the founding team. It's a remarkable run over 6 years, but it took over 20 for this to happen. The founders have had so much trust. They're such different personalities that when they came together to create Wiz, they created a culture that could move so fast in an existing category and really disrupt the market. So I think ultimately what you're acquiring, whether it's a small, medium, or large acquisition, at the core is a group of people and a culture that comes with it.
One, person close to Google when this announcement first came out mentioned to me, it was just like, in a world of AI, cyber attacks are going to become even more likely. Obviously, we need to be very aware of cybersecurity. In some ways, this deal is a sense that Google needs to be ready if there is a major, massive cyber attack, if they need to defend their customers. Obviously, it's an offering that they can provide cloud customers. I mean, now, since the deal closed, now we're at war with Iran, and that's obviously increasing the risk of cybersecurity. So explain, where Wiz sits in terms of cyber defense, why Google would want in, what they're really delivering to customers.
I think you nailed it. There's a cloud tailwind. Right? More and more workloads are going to the cloud. We've been on this transition for over a decade. Finally, for example, over the last 5 years, the pharma industry has moved all of their data to the cloud. Second, there's a security tailwind, right? There's more need to secure against risks for large and small businesses across the world. And the amount of risk is varied. I'll come back to that in a second. And then third is AI. Right. Everyone knows we live in an AI era, and with more AI workloads, there is a demand for more security. On the back of those three tailwinds, it just so happens Wiz is at the center. And that's not by luck, right? They've been intentionally crafting their business to be there. They started with a platform that served large enterprises from the get-go. And so it's really complementary with all of the resources and the AI infrastructure that Google has.
So take me back to the beginning. I mean, I think I was reading, this was the Claude synopsis, so hopefully this is correct. But they stood you up for 45 minutes, the founder, before your first meeting, or what did you see when Wiz was first on your radar?
That's not how it felt like. Have you been to an Indian wedding?
Not a huge Indian wedding. I've been to 50% Indian wedding now that yeah.
Okay, so this story is like 50% true. Like, irrespective of the size, right? People are fashionably on time.
Yeah.
And so my reception of Asaf being a few minutes late was he was on time. So Claude's got it wrong in terms of word choice.
You were not offended by it was
No. I think a lot of individuals have had a similar experience with Asaf. But what started late really escalated because in 72 hours we had a term sheet signed. Asaf and I had this unusual kind of chemistry and click from the first moment that we met. I can't explain it, right? And you can't prepare for that. All VCs are salespeople. I'm not the best, as you know, but
You're a great VC, definitely at this point with Datadog and Wiz, and we'll talk about that. But you're saying you don't see yourself as a salesperson.
Well, I think salespeople can be really prepared, but you can't prepare for serendipity. Right. And so sometimes you just click with someone, and it was both professional and personal. And we were finding ourselves completing each other's sentences. And so that was the first moment for me. It was on the back of another friendship I had with Michael Sholov. Michael was at the time, he was the founder of Lacune Security. Lacune is this pretty deep cut into Greek mythology that clearly Claude didn't tell you about, but I encourage you to look up afterwards. He's this priest involved in the Trojan horse story. So Michael, who became a friend of mine, I invested in his company. I didn't know anything about security. And so he's like, I've got to make use of Shardul as a board member. So he sent me hunting for customer relationships and help building out his management team. Again, accidentally, Michael and I became friends. After Fanny and he had their first kid, I was on the top 3 of folks who got a phone call, right? Because we really cared about each other. And so Michael, by pure chance, introduced me to Asaf, and Asaf and I, by pure chance, clicked. Fast forward a decade, Asaf calls me on my birthday, and he's like, "Hey, let's go." And it was
now
done.
It's time for the deal.
It was done.
But it was clear that this was going to be it's you and Sequoia are doing the first round, right?
Gilly,
Doug Leone. Right.
Well, no, Gilly, Doug Leone, and I all joined the board at the first round. And so when Asaf called, he's like, we're working on a new company. Let's go. I was like, I'm in. He's like, do you want to hear what we're doing? And I was like, that's a detail, which is a true story. And a week after we had wired the money, we were together in San Francisco. He's like, "Hey, Shardul, we pivoted." I was like, "Okay, great." We didn't write a memo anyway. What are we working on? And so there was the only thing to invest in was belief in the founders. And again, we had the benefit of having a front row seat 10 years ago. So we knew their character. We knew the lessons they had learned within Microsoft after they sold Adalum. And as a consequence, we knew how they were thinking about building a culture and a platform from the get-go.
How much do you remember how much money you put in right at the beginning?
No, I couldn't give you dates. I couldn't give you numbers.
I imagine it was small relative to the overall investment over time.
Yeah, exactly. It was like a standard seed investment. Later that year, it was we led the Series A. A few months later, we co-led the next round, and then we kept going. And so over time, we broke a lot of rules. Right, we invested out of 4 funds, which was the first time we've done that in Index's history.
First time that many funds or across funds?
First time that many funds. With Datadog, for example, we'd also invested across funds with a number of
I feel
businesses.
like this used to be out of vogue in venture, and now everyone's concluded you have to double down on your winners to succeed, right?
I think it's more complicated. So let's see. If I break it down in the industry, one of the things that's unusual about Index is we have one team across strategies. So like many other large firms, we have a seed fund, a venture fund, and a growth fund, right? But most other firms have specialization, which makes a lot of sense. Like people who think about early stage risk are often different than those who think about late stage risk. And so for those businesses, often doubling down requires like convincing a different group of people, right? And they have a different apparatus to make decisions. And that's not all bad, right? Because when
it makes you honest. It's like somebody else has to review and say, are we doubling down on sort of a bad investment?
Right? It's like a type of check and balance, and it's a type of specialization that ought to support like high quality judgment calls. So it's a way of doing business. Doesn't work at Index. At Index, every time we've had a silo, it hasn't worked. So we converged, I think in 2010, we converged our venture and growth teams into a single team. So all of us are responsible for all of our distinct fund strategies.
All over the world?
Globally, yeah.
Because that's another area where firms also divided up sometimes.
Yeah, absolutely. And we can come back to like why that's super hard and why we're like unusual in that dimension. And it's not for everyone. This is not like a pitch on like redesign your venture firm. Like it's just our culture supports one team across geographies.
So given that you don't have separate growth investors, does that make you more reluctant to do this sort of multi-fund investment?
So within Index, it's so personality driven, right? So for me, in order to develop deeper conviction over time, I require context, right? So I spend a lot of time with the management team. I like have a login to the product and I'm testing it frequently. I spend time with the go-to-market team. I spend time with the marketing team without crossing the boundaries of a board member kind of getting involved. And fortunately, I'm not an operator, so I can't really tell anybody what to do. But I can learn a lot from context for a company that helps because I can make high-quality judgment calls on like who to recruit, when and how and why, which can change the trajectory of businesses. But for Index, it gives me more context. Now, second, as a personality, when I'm in the sausage making, I see the warts, right? And so as optimistic as I am as a natural born venture capitalist, I have a fair amount of skepticism, right? And as a consequence, I can get really close to warts. And when I see flaws, I really study them. So no, it's not easy for me to develop deeper conviction over time. It's actually really challenging.
Right. You understand what the potential risks are of the business.
No, that's actually not true. I think far more about the opportunity and the upside than risk calculus. I actually think it's a fool's errand to try to attempt risk calculus. I think it's overweighted in our industry.
Right.
And it's like human nature.
To make the bet, you have to see sort of the big upside still. But I thought you were saying by seeing the warts, that's what gives you this sort of
but when you imagine if you start to see blemishes in the room and they start attracting your attention, all of a sudden it's harder to see beauty, right? So it can be more difficult and challenging to see the whole picture when you're attracted to warts because you want to talk about problems to fix them, right? So it's hard for me. However, the good news about Index is I don't make any decisions. It's a true partnership. And as a consequence, at every single phase, we're having debates, right? We debated the market. We debated the product. We debated the quality of the execution and the traction. We debated gross margins. We debated strategy. We debated so many things. And very few of our investment decisions were actually unanimous. What does that tell you? It tells you we have a culture that promotes dissent because we want to get to the highest quality judgment calls. We shouldn't confuse like the judgment calls that we serially made with the outcome. Like that doesn't mean the judgment calls were right, but we went as a group into really high quality judgment calls, which unlocks the ability to double down against conviction. And you can see there were like some of the best firms on the planet with the best minds that took a different view. They were not like wrong. They just took a different view.
Right. So you end up building the largest position, even though there are 3 investors there.
Yeah, absolutely.
Right. So that's key. So what was the next key decision? Like, was there a particular round, or when do you think you really like put more money in a way that others might have missed, or that you're proud of?
Well, every single one, right?
Just like continuing.
Yeah. Well, so the Series A, what's the context that maybe I rotated against? There were 2 key customers. One of the 2 I had introduced. And the buyer at that company is he'll remain unnamed, but he's an intellectual snob, right? and he doesn't do me any favors, right? So when he made $1 million purchase order decision in 4 weeks and sent me a voice message that sounded like a country song, I had distinct asymmetric information. And I read into the qualitative of that signal more than the quantitative. Number two, soon after that, company received like conventional wisdom, which is like, hey, founders, you guys have sold some customers, right? That's great. Now you should hire a couple salespeople, right? To see if we can scale the apparatus of the business. And right place, right time. There's an individual, Colin Jones. He was previously at Duo Security, a company I had happened to invest in many years prior. And I knew Colin Jones's mentor, Jim Sibb, and I knew Sibb's mentor, Zach Erlacher. Erlacher is now a venture partner with Index. Sibb had joined another one of our companies subsequently. And I knew both Erlacher and Sibb were telling CJ, don't join a company pre-product market fit. The way to define pre-product market fit is $10 million of revenue. I was like, CJ, they are wrong. Asaf was being told, hire 2 salespeople. And I was like, Asaf, that is wrong. And so I got involved and CJ joined, right? That gave us asymmetric information because we knew the personalities. That unlocked the next round of financing. I continued to spend a huge amount of time with, Kostik and Ami Lutwik. Ami is this like genius who lives in the future, right? And it's so challenging to talk to him because he's like always right. But it's like Socratic and he's like trying to lead you to truth because he's such a teacher.
What's his role? What's he do?
He's a CTO.
Oh, okay.
And Kostika is world-class product, right? Like top 2-3 product leaders I've ever come across. He's able to shape a promise that is current that he will deliver on. He's also challenging. And so there's constantly tension between the two. And when I started talking to them in depth about what the product roadmap and what the product vision would be, the opportunity that was present for Wiz just kept expanding. And so my view of what was possible for the business continued to grow. So we had to get more involved. And like I can keep going with like individuals like Dali Rajic who have been trying to recruit for a decade. When he joined the company, the impact he made on the business, or Fazil Merchant, who literally I'd introduced to Asaf 2 years before he joined. Like I knew the inflections of the business.
I'm gonna stay on Wiz, but I want to digress for 1 second.
For sure.
I mean, you're clearly like, I'm convinced like a scholar of the people. Like has this like sort of philosophy of really just like analyzing the team ever led you like astray? Or like I imagine it's tempting to be like, these are great people. The numbers, they don't say what the people should. Or like what what do you do in sort of other investments where have you found the sort of disconnect between the people and the money?
You know, where I've been wrong and I'm most insecure is making judgments of people over Zoom. I think I have a really hard time finding connection and like feeling someone over Zoom, and it's reciprocal. I think the first time we were on together it was over Zoom. This is way more fun, right?
Yeah, exactly. You sort of
and I think it's like body language, it's micro expressions. I have more comfort with pregnant pauses and like space in a room. And so it's very idiosyncratic for me. I have partners who are phenomenal at like reading people over Zoom. And so I don't make decisions now. Like I won't invest in a founder over Zoom. An example, Asaf introduced me to someone actually. I met them on Thursday morning over Zoom. And I was like, guys, there's something here, but I don't make decisions over Zoom. And I had like some health stuff going on in the family. So they were like, we're on the next flight, and I was like, whoa, and they're going through Italy. I'm like, I could just buy you a better flight. And they're like already like in air. And so they land in New York City, and 6 a.m. on Saturday, we start with like a walk around Central Park. We hang out, lunch, drinks, etc. 2 a.m. we finish at McKittrick Hotel.
Oh my God.
I don't know if you've been to.
Isn't that where they used to do those live shows? Am I crazy?
Yeah, sort of. I don't know. But you are crazy, but I'm not sure about this story.
I'm thinking of Sleep No More. But
oh yeah,
that's a totally different.
That is.
I thought that was called the McKittrick maybe I'm making it up.
McKittrick Hotel became Sleep No More, that I would not recommend as like founder dating or like dating in real life.
You don't even talk. It'd be terrible as founder dating.
Dude, my wife was so creeped out when I took her there. I mean, for some people, it's a terrific experience. Not my scene.
Yeah.
But it's shut down now.
Okay.
McKittrick, what I'm referring to, has this incredible like speakeasy bar where you walk up and they don't have a menu and you tell them the direction of the drink that you want.
Okay.
And then you walk next door and you get into this like full laundromat and you walk through the laundromat to get to the like basically a mahjong parlor in the back, which has an incredible mood and ambiance, and you get to see 5 different acts of close-up magic through the night. So I'm a nerd. I love magic.
You guys love magic.
I absolutely do.
This is one of the things I definitely know about Index. You were like at magicians at parties. Yeah, I love it. Yeah.
At our office opening in New York, I insisted that we have a magician from McKittrick come over. So we finished the night at 2 a.m. at McKittrick, my favorite place perhaps on earth, and we shake hands on working together. Right, the day of. The next day, we talk about numbers. Like, what is the deal?
Yeah.
The next day, I tell my partners I've done this.
Right.
And I ask for forgiveness, not permission. And like, I think approximately two weeks later, the company actually incorporates.
Sorry, and what company is this?
It's still in stealth.
Oh, wow. It's the next one people should be chasing. If a founder gets you to be out till 2 a.m., they're going to get your money. Or like, what time in the day? You're like, this wouldn't still be going on if he's not not ready to check.
I once learned that from Olivier at Datadog. He told me about the concept of a no battery.
Okay.
Right. So like at the beginning of the day, your no battery is completely full. By the end of the day, it's like wiped out.
Exactly.
So the way to get money from me,
you try to get information at the end of the day.
Exactly.
Definitely.
Just keep talking to me, and eventually, I just can't. I can't hold it.
So we're sort of telling the Wiz story. We learned the lesson of like, keep investing and sort of the firm deciding on conviction. Like, I guess another key point in the company's history, which maybe you fit in as a board member, I don't actually know, is sort of the will they, won't they with Google, and sort of like, oh, do they go public? Do they sell at a lower price? Like, what can you share about sort of that decision and how you thought about things?
Yeah, at a high level, I've been on both sides, right? On supporting Wiz, for example, with acquisitions, supporting Datadog with acquisitions, supporting Coalition with acquisitions, and on the other side, 10 plus companies of mine have been acquired by other businesses. Duo by Cisco, Signal Sciences by Fastly, and many more, right? So I've seen both sides. I think for acquisitions to be successful, my view is they should be small or they should be large. Like middle-sized acquisitions are the most difficult for both sides to be successful, right? And I think it's really important for there to be a shared concept of success, right? So small and large is kind of the most important zip code to play in.
Mid-size, just because people don't get excited and they just walk away, or I'm trying to understand.
You're asking what are the common reasons that mid-size
You're saying mid-size deals fail, or
yes.
How come?
Yeah. So the most common reasons are like integration. Number 2 is motivation.
Not important enough to the company, or
exactly. It's neither here nor there, right? So it doesn't receive the TLC needed to make it successful. Number 2, because it's neither small nor large, the acquired entity doesn't have the space to make an impact. Right. Those are the 2 most common failure modes. And so, as you can tell, it's more human psychology than like, how does the product fit into the strategy? So small and large is number 1. Number 2, I learned this from Roy Resnick, who's one of the other co-founders of Wiz, a decade ago at Adalom. One of his mentors who's now passed, is Zohar Zisapel, a legend in like the early tech scene of Israel. And when Adalom had an acquisition offer from Microsoft, the first question Zohar asked the founders was, what do you want to do? And I actually think it's a profoundly important question. And I do subsequently tell founders what I think. But the first question is always, what do you want to do?
Datadog is public. That's one of your other huge investments. I just checked. It's like 44 billion right now or something.
I haven't checked
Yeah,
today.
44. At some level, yeah, it's bigger than the price we're talking about with Wiz, but I assume you make more money off. I don't know how much you're still letting things ride with Datadog, but a clean acquisition, you get paid in cash as a venture capitalist. That's a very desirable outcome. Or how do you think about the advice that VCs give of, go public, go the distance versus everybody getting paid is, a great outcome?
So I don't think about optimizing exit. Like, obviously, from a fiduciary standpoint, as a board member, one of your responsibilities is to try to maximize shareholder value. So you think about that, but I wouldn't confuse that with the shareholder interest of in what period of time, how much return do you generate. I think that's you have to be. As a founder, you should be really conscientious if a partner, an investor, a board member that you involve cannot distinguish the two.
I'm not sure I can, so you have to dumb that down a little bit for me. What do you say?
As a board member, I'm responsible for everybody.
Okay.
Right? As a shareholder, I'm responsible for myself.
Right.
Different.
Okay.
So you have to be able to acknowledge like your own interest and what's in the collective interest. But it's which is speaking to one part of your question, right? One part of your question is like, well, for the investor,
right,
like it can look very different. Part of, I think, the job of a investor board member is to push entrepreneurs past their limits, right? And remove anything that's in the way to really experience the fullness of ambition, and even sometimes, kind of bring the goalposts further apart. And so the same has been true for Datadog, right? Like years ago, we talked about like $1 billion in revenue as a far off milestone, right? Now we're talking about like a completely different level of revenue as a achievable milestone. So you're constantly kind of pushing where the company can be, whether it's a M&A or an IPO is more of like a moment versus a strategic, direction to push ambition.
Yeah,
Does that make sense? It
does, but there also, there's subtlety to it in that. So it's like, okay, you're like a shareholder, you're a board member. You also, I imagine being an index and like you're playing a repeat game. So even as a shareholder with LPs, you're like, listen, doing great by founders and like honoring the founder vision in some ways is also in our like fiduciary interest. So you have that sort of complicated calculus. They're like the founders themselves have like, how much more do I want to keep working on this versus exit? And then they also have the sort of obligation of like, well, is this so much a better deal? I mean, it's just, do you try to turn this into like a math calculus, or like how much is it pretty soft? This sort of, how much more is this than I would have thought versus how much do I want to do it? You try and turn that into numbers, or you just sort of live in this sort of, it's a soft, squishy thing?
It does depend on the relationship with each entrepreneur. So last year, there's one entrepreneur who's got a terrific business that's growing super well. That was attracting acquisition interest. And I was like, hey, ask yourself 2 questions. Like, 1, can you 10x your company? And number 2, do you have the stamina to do so? If the answer to both questions is no, you should probably sell. Right? If the answer to the first one is yes and the second one is no, maybe we think about building, a succession plan. If the answer to both is yes, what are we even talking? Stop wasting my time.
Interesting. And those were sincere. It wasn't like, oh, I'm leading him to what I want. You were like, it depends on which one.
Well,
it is.
It can still be a conversation, right? Which is like,
you sort of have a theory of which it is.
The starting point is like, well, what do you think?
Right.
Like, okay, you think it can be 10x, right? Like, let's talk about that. Yeah. What is the plan to like 10x? And I might disagree and say like, well, I don't think the opportunity is here. I think it's there. Or you're saying it's 10x. That sounds to me like 50x, right? So it's still a conversation, but the starting point is like I think it's a sincere and useful framework.
Right. Yeah.
If someone does not see the opportunity, right, then it's like, okay, we need to like search for the opportunity. Like it's always a conversation. In terms of stamina, it's so introspective, right? Like, we debate like how much is our job to listen to, and not to put an intention, but how much of our job is to inspire entrepreneurs. Super interesting question, right? When someone doesn't have energy, what do you do, right? And I think you have to like see the whole person. And that's why to me, it's really important to understand someone's flaws, right? And have context and have like a real relationship so that I can be more objective about.
Have you had founders who lost steam that you were able to resuscitate, or it feels like once they've sort of lost the energy, it's like, okay, we need to change gears?
That's a really interesting question. I'll have to think about that.
Okay.
Yeah.
All right. So, I mean, people care about this for a lot of reasons. With the money being so large is obviously a piece of it.
Yeah.
What's it like? So it's $32 billion sale, right? It is cash. What does that, and is 2.8 billion the number coming to Index?
No, I don't think we've talked about it.
Okay.
I saw
Is that
some
the number,
larger numbers that were talked about a couple days ago.
All that money, it goes into a bunch of different bank accounts, or it first goes into like one bank account and then you disperse it?
So yeah, 32 billion gets sent in a number of places. Into a number of different places. Right. We have, a group of limited partners, largely great causes, right, that receive distributions. We have a team, including inside of Index, rather, that receives distribution. So ultimately, there's lots of.
So it goes to like if some foundation is a limited partner in an Index, they get it sort of directly. You get sort of the carry or whatever, the fund. And so it goes, you're not like routing, it's not like some billions of billions comes into one pool.
You should probably talk to Jan or Martin about like payment
You're not
infrastructure.
Dealing the like money flows, and it's just fascinating that it's I have an employee much smaller scale. It's like she just started, she wired the 70K. It's just funny like the actual money movement when it gets so large. Like I have friends in private equity, they'll send the actual check, and it's like you gotta like make sure.
I think it's a really relevant question, like I went to Carbone's last night.
Okay.
And I'm with a colleague of mine from San Francisco who'd flown in, and we're having dinner with an entrepreneur. And and it's her first time at Carbone. I'm like, what do you think? She's like, it's great. This neighborhood's really cool. And I'm like, I have no idea what neighborhood we're in. She's like, Shardul, we're in Greenwich Village. And I was like, okay, cool. Where is that? And I've lived in New York for the last 4 years.
Yeah.
I'm explaining this to one of my other partners this morning.
Okay.
And she's like, is this consistent for you, like across countries and geographies? Like, do you know if you're flying out of JFK, Newark, or LaGuardia? I'm like, I don't.
Okay.
Like, I just take the Uber and I get to the airport and I find my gate. Like, it drives Jan crazy because he's maniacal about knowing like every single flight alternative and uses Flight Aware to like pinpoint which flight is his on the way to the airport. But the logistics of it.
I live in your world as well. Or
I'm not proud of this.
Right.
I'm like geographically inept, but I think it speaks to like sometimes like logistics and movements are just not very interesting to me. And so similarly, like how the money flows, like we got a great team that, watches and makes sure it's appropriately handled, and I trust them. But
I went to Carbone one time. We went too late at night. And, it's hard to get into. So then I was like, all right, like we got to really make the most of it. We way over ordered. We treated Lilia is probably my favorite restaurant. Have you ever been to Lilia? Yeah. And like, that's like small plate Italian. Yeah. So we ordered Carbone as if it was Lilia. So we had like, my wife and I had way too much food. Yeah. At the end of the night, we had like espresso martinis. I literally thought I was going to like have a heart attack over that meal. It was like gluttony to the point of real like suffering over it. Yeah. Do you like Carbone?
I love the spicy rigatoni.
Yeah, it's a classic.
And the dessert, the way they demonstrate it is hard to resist.
That was the other element. It was my birthday. And they didn't bring the first dessert with a candle. And so then my wife was like, oh, it's his birthday. Anyway, Are you celebrating a lot?
When's your birthday?
September 7th.
Okay. Noted.
The
Candles coming your way.
what is it? Can you? How do you stay motivated after like such a huge exit?
It's all about the next relationship.
Okay.
Right? We don't think in terms of deals, by the way, right? Like I think most of the industry is geared around deals.
Okay.
They talk about like the number of deals, the amount per deal, like they talk about chasing the next deal. We think in terms of relationship. The next relationship that we build depth in is the most important relationship. And that will lead to accessing, assessing, winning, supporting, and exiting great investments that generate terrific returns for LPs. But what's motivating is like, it's all about the people, right? And so I just go back to this impossible art of, studying, people like human beings. I'm less of a sociologist and anthropologist than like a psychologist. But it's like, there's nothing better. It's the most fun that I have.
If I'm a startup founder, how do I sort of get on your mind, or like, how do I sort of start this relationship, or like it needs to be, I was at a company that you respect through somebody, or like, what's the way for somebody to sort of break into being in your awareness?
Well, I'm not everyone's cup of tea.
Okay.
Right. So it should not be everyone's mission statement to like get into my awareness. The fastest path, right, is through a warm introduction. Right. I don't know how you met your wife, but like
we went to college together.
Yeah. I went to high school together with my wife. I took her to homecoming. And so, it just so happened we had the same last name, not because we're second cousins or anything, but, we had lockers next to each other. So we knew each other for our lifetime. But when a friend introduces a friend, you just have many more priors. You're more likely to have shared values and alignment around a range of different opportunities in the world. And so it's easier, I think, to find connection, right? Going back to how Michael connected me with the SOF. And so it's not for me in terms of like being efficient, right? Cold email me, cold LinkedIn me. Like I'm on it. But a warm introduction is the most efficient path, and it's usually also the best way for someone to figure out if they even want to spend time with me. Like, again, most venture capitalists are terrific salespeople. The best thing an entrepreneur can do is reference, right? So go talk to entrepreneurs that I've worked with, like hear what their side of the story is, and then decide like, do you actually want an introduction to me? Or to anyone else. Totally
changing gears. What categories are you hunting for now? Like you've sold a cybersecurity startup. Does that mean, I'm free? I can do the category again, like reinvent it. Like what are you chasing right? Like in terms of themes, like what are you really looking for at the moment?
I'll try to parse it into two dimensions.
Okay.
One, obviously, like we're in the AI era and everything is related to AI, and so I think it's a really relevant question to think about. Like, what categories are interesting? I'm not a top-down thinker. Like, it's just not my skill set. I'm a bottoms-up person. Like, and as a consequence, I start with the people. When I met June at Simile, right, which is aiming to simulate the entire. You wrote about it. So like he's got the imagination to simulate the entire planet, yet he's so focused on delivering value to Fortune 100. It's like in the second sentence, and he's talking me through like POCs and MOUs and different terms. Like that contradiction in June was so compelling, and then it got like. There's so much depth to the portrait when I learned more about him as a studio artist, but also his co-founders, Percy and Michael. And then I learned even more when I spent a significant amount of time with Laney. And then he pulled in Mihika, who we've known for years. And so like the enrichment of my enthusiasm around Simile starts with the people. And it just so happens, I think it's going to dominate a category because they have moral authority. When I invested in Parag at Parallel, I don't know if you've had a conversation with him yet.
Yeah. He announced one of his rounds on stage.
Right, but I wasn't sure if you guys were one-on-one yet.
Actually, I think, yes, at a dinner. I don't know, we haven't like hung out, but I've spent time with him.
So Parag's amazing. I love him. When we invested, like first we went on a walk, right? And it was supposed to be 45 minutes. Instead, it was like an hour and a half, 2 hours. And I was like, I don't know what's going on. But we just like clicked. I asked him like, how do you learn? And he was like, through adversarial conversation. And I was like, I can do that. And so we've had a phenomenal relationship. But leading up to our investment, I did a lot of references. I hadn't known him as like, beyond the celebrity of like CTO of Twitter, CEO of Twitter. Like I didn't know the human being. And so I did a huge amount of like referencing, including talking to his wife. When I wrote the memo internally, there's nothing about his business because he didn't even know what he was going to work on. So it was just like 5 pages about notes on Parag, full conviction. We invest together with Vinod and Josh in the first round. And then I
Josh
Koppelman, excuse me.
Oh, at first round. Okay. In the first round, at first round. Yes.
It's a commercial for Josh. I'm a big fan of both of them. But after we invest, the wire is in the bank. I asked Parag, I'm like, hey, like, why'd you let me in? Like, we've known each other for 6 months. You've had relationships for a decade, right? So like, how did I receive this honor? And he's like, Shardul, like you made it so painful. And he's like, if you take an easy decision this seriously, I want you on my side. We subsequently co-led the Series A with Mamoon, and now he's working on web search for AI agents, right? And as the world has become agent first and agentic, web search is such a natural requirement for the best companies in the world. And so companies taken off. But sincerely, it wasn't a category. It wasn't like
the story here is
thesis.
I'm following the people. I'm not chasing categories.
Yeah, I don't know how. Now, the inverse, the second part of your question, which is like, are you going to do something else in cloud security? It's something I worry about. Like I've had such a front row seat at what I think is the market leading company in cloud security that I'm actually riddled with bias. So I'm not sure I can be objective in taking a view on who can possibly.
Now you're like too much of the expert. You're like, oh, I'm used to trusting that the founder is the expert. Now you've developed expert.
No. It's not expertise. It's bias.
Okay.
Like I have drunk the Kool-Aid of Wiz more than anyone on the planet. Right. And so to then say I'm going to switch to iced tea is super hard. Right. So the beauty of Index, again, is it's a partnership model. Right. They're super talented investors like Jahanvi, who's also focused on security, that can complement me. Right. And so is there more opportunity in and around cloud security? Maybe. Right. Am I going to be the biggest bull on competing against Wiz? Absolutely not.
What do you want Index to be, I don't know, in 20 years? Or like we're in such an odd time in venture, the mega firms like keep getting bigger. Like there are firms clearly pursuing sort of AUM and dollars that they're managing. Like how do you think about sort of that trend and how much is Index chasing sort of scale of capital? And like how do you really want to distinguish the firm over the next couple of decades?
So the core of Index is it's like a machine, right? We create a culture that can recruit, nurture, and develop great people, meaning investors, right? And strategists. Like we can do that with our team. The consequence is we can attract and nurture and develop greatness in entrepreneurs.
Okay.
I want to make that machine more and more effective and outlive me. That's the most important thing. Now, the consequence, I believe, of raising more and more capital, it's like supply demand. I'm a U Chicago economist, so like I get it, right? Public market investors can't access private market companies, right? You've written about this, and therefore the Russell 2000 is now these private companies, and to get access to that, you can invest in mega funds. That's part of the
You have
logic.
firms like Thrive. I mean, with the rumors, they're like telling entrepreneurs stay private. Like we'll just keep doing rounds. There's like almost even the investors who might want to see an exit seem to be encouraging founders to stay private in certain ways.
Yeah, don't know.
Yeah,
that's
anyway,
interesting.
I don't want to derail you on that, but
that's interesting. We can talk about that, but there's a place in the world for that, right? And I totally have respect for individuals who see their business model as like AUM collection, right? Like respect, and there's an opportunity and you should go chase that. I think for us to succeed in attracting, developing, and building greatness, it's about the craft, right? It's about the focus on the individuals internally and the entrepreneurs that we recruit. And so not scaling is kind of the point.
But what is the fund size right now? Or
we have like a few $100 million seed fund, $1 billion venture fund, $2 billion growth fund. So we're like large enough to be really relevant across multiple stages to some of the best companies in the world, right? But I think sufficiently focused to attend to the craft.
do you do SPVs on top of it, or?
I have not. I'm not a fan of SPVs personally.
How come?
It's confusing to me, you know, like, is it my main business or not is how I think about it. If yes, then like I have high conviction. I want to invest out of my main funds. The SPV is like, well, I've got an access right. Should I monetize it? Right. And make some economics off of it. That's like how it feels. And so it's like, it's satisfying, like, and I don't mean this pejoratively, but it satisfies the greed in me. Right. More than the artist in me.
Right.
And so I'm in service of the artist. Right.
I think that might, I think that's one of the challenges covering venture capital overall. It's like sometimes it's a money game on some level. You're like,
Absolutely.
Shouldn't you be optimizing for the money?
Yeah.
But then there is sort of this aspiration of like, there's still an art to it, and like that's sort of like the crass way to make money. But there's an argument in some of these firms. I mean,
I don't think it's crass.
Okay.
I mean, I don't think it's crass at all.
Okay.
Like I'm just saying it's my personal style and preference, right? Like, if you want to raise SPVs, like, God bless. It's totally cool with me.
But there's a limit to how much you'd put of a single company in a fund, right? I mean, at some point,
you know, it's a really important question, and it's still something I'm trying to develop skill in. Right? The question is like asset allocation. So, how much do you concentrate within a given fund? And I've talked to a lot of different folks from Thrive and Lightspeed and Sequoia, like a bunch of my friends,
right.
About this concept of how much to concentrate. I actually, like, I'm still developing that skill.
You guys have sidestepped the big foundation model companies. Is that right? Or sidesteps, maybe not the word.
Yeah, sidestep's not the right word. We've definitely participated in labs and like foundation labs and neo labs, but we aren't playing statistics with like put a small or large amount of money into every team that comes out of Anthropic or OpenAI or other major labs.
I mean,
so we've sidestepped the portfolio theory.
Yeah, I mean, there's a lot, like Lightspeed. I mean, a huge percentage of their fund, I think, is in Anthropic now.
Oh, really?
And
a lot
of
their
numbers. Yeah. So you just made me think of that with the sort of and Anthropic also. In terms of this SPV conversation.
Oh, interesting.
There are firms where they got in early, like, and you don't have to weigh in all this, but I think like Spark, I think got in my sense is they didn't necessarily use the allocation in every way they could have. And then you have other firms, I think, like Menlo, where they were fairly aggressive in like having access and doing SPVs. And so that venture capital has just become in some ways like a different business in that, like, that because there's so much growth investing happening adjacent to venture capital.
There are no sacred cows, right? So maybe I revisit the concept of SPVs in a couple of years when I'm exposed to like the next Anthropic. And I'm like, exactly. I don't have enough money.
Right.
Usually what I do when I go to my partners and I'm like max conviction, I'm like, tell me the maximum amount of dollars we can invest in this company. Like, double that. That's what I want to do. And they're like,
do you guys, does everyone at Index have to, or what's the level of agreement that you need across the firm to do a deal?
We're consensus oriented.
Okay.
Yeah.
So like just majority or?
Yeah, it's like it's a little bit, so we can vote 1 through 10. You can't vote 5 or 6. If it passes a certain threshold, the answer is yes. So if someone were like, it's a 1, right, that makes like the calculus a little bit more challenging. Largely it's consensus, which largely follows like simple majority.
Can you re-vote, or it's like it's one vote and then it's over?
Great question. We do revotes. I recently studied, and I don't think we're that great at revoting. So
interesting.
I think no matter, I don't know why it is, but our first impressions are pretty good.
Like the revote, I imagine, is like the partner who likes the deal, like, is like, how do I get more people around this? And
No, it's not politicking. It's like, hey, the discussion we had was based on a set of inputs. And two things happen. One is like, I studied and I think the inputs are slightly different, or are significantly different. And so we should revote with a different set of inputs, right?
Right.
The second is, hey, this is how you interpreted the input, like partner XYZ. Like, I want to talk to you about that. And two things can happen. One is like, oh, okay, I hear you now. And you know what? Like, I think that's totally right in terms of this judgment call. Like, not going to revote, not going to move it forward. Sometimes in that conversation, it's a discussion and the person's like, oh, I didn't see that point of view. Like, we didn't have that discussion in the investment committee. And as a consequence, I want to change my view because now I misunderstood. So we have that like ambiguity of like conversation. We have a culture that, again, supports like dissent, right? And you can only have dissent and ambiguity when there's a lot of conversation. Going back to one of the points you made, like one of the reasons I think most firms have not been successful across geographies is it requires communication, right? And our business is so trust-based that you have to constantly communicate. For many people in our industry, communication feels like a tax. Communication feels like a tax. You should not join Index because we communicate a lot and we like each other. So it's fun. But that supports like dissent and ambiguity and conversation. I still think though, like despite those revotes based on like good intent and more inputs, the first time we vote, we're usually right.
Right. I got asked on my last podcast episode by Barry McCardle at Hex whether I thought the best venture capitalists, like, you know, roughly put, were like obvious at the time or not. And I'm curious what you obviously know this much better than I do. Like, I mean, you look at Wiz, I mean, it's like you guys, you know, you're more storied now in the rearview mirror, but like it's a good set of investors from the beginning. Like, how much do you think your best and Parag obviously was already sort of like Twitter famous when you did that investment. Like, how much do you think your best deals, it's like those were like, it wasn't clear maybe the price, but they were obviously like strong deals at the time, or there were ones where you're like, people didn't see it? And what's your philosophy on the sense of like the hot deal?
I don't think there's anything that's obvious.
Okay.
I'll give you just two examples of evidence, right? Like, thank God 20 plus firms passed on Datadog before I co-led the Series A. Like, right? Not obvious. Wiz, there's one investor who increased ownership at every single opportunity.
Right. Obviously, I'm not saying there's no skill. Like,
no. I'm just saying, if it were obvious, everyone would have behaved in the same way. Right. And everyone didn't. And I'm not confusing those judgment calls with being right. Let's not. There's confidence and humility. We can have both and not cross over to arrogance. So if it were obvious, the counterfactuals would be different.
Right. And I assume there are plenty of deals where it's like,
I'm not an investor in Hex.
Right.
So maybe that one's obvious. I've never met Barry.
Right. Yeah. And there are lots of deals that are hot. You have to pick like, which like hot deal also, pans out, because there are a lot, I feel like covering venture capital, I mean, this is consumer, but far from it. But like, I broke the seed in Series A of Be Real. There was also like Hopin. Those were both deals where it's like, those could sort of like make, they were sort of like, strong signal, you got it at the time, and then it doesn't last. And so, the sense of like a hot deal doesn't always, obviously live the test of time.
Look, one of our, I think we've talked about it before. We've talked about like sins of omission, right? And one of the sins of omission is don't argue with traction, right? Another way of saying that is like when there's momentum, like there's a higher probability that the company might be successful. And so that expressed in investing is this potentially like deal heat, hot deal, like FOMO thing.
I feel like sometimes there are stories that I should write that they almost feel like too straightforward. It's like, if I did that story, it's just like, it'd be easy. Where it's like,
you do a good job mixing it up.
But like, in some ways it is the same sort of thing. It's like, no, I need to do the hard story that's sort of like, causes turmoil and like anyway.
But sometimes, having a point of view can still be differentiated when there's a common understanding, right? And so you can still express significant returns into a terrific company, even if there's a consensus view. So that's where I'm being a little flip, but I'm trying to become more precise and not so binary in terms of like, oh, everybody sees it. Right.
Last question for entrepreneurs, like what do you think they should learn from the Wiz journey?
Oh, I think imagination is stretched now, right? Like more is possible in a shorter period of time from anywhere in the world. You can approach large enterprises and deliver value in unforeseen moments. Like I think that not just in Israel, right? Like globally, we're going to see more ambition out of entrepreneurs.
You're saying from new countries or just...
Like any entrepreneur who studies Wiz will know that more is possible today than was 5 years ago.
Great. Shardul, thank you for coming on the Newcomer podcast.
That's it. It was so fun.
Thank you.
Thanks, man.
That's our episode. Thanks, Shardul Shah, for coming on the show. I'm Eric Newcomer. You can follow my writing and my team's writing at newcomer.co. Please like, comment, subscribe. Excited to be a YouTube hustler now. So, give us your comments, sass me, whatever it is. Tell us guest suggestions. If you're hungry for more podcasts, I'm also one of the co-hosts of the Cerebral Valley Show with my friends Max and James. Otherwise, see you in this feed in a couple days. Probably in a week. We're publishing as they come. All right. Thanks so much.